Good morning and welcome. Pet Radio News Hour. Joe and Jason on this Tuesday. I hope it finds you well out there. It's going to be a gorgeous, gorgeous day here in the Valley of the Sun. The pigskin flying all around. Football's back. Baseball playoffs. And, of course, tonight, the big presidential debate. I don't know that it matters, right? You probably got 90% of people, doesn't matter. And what I mean by that is, however good or bad Harris does, however good or bad Trump does, their minds have already been made up. But I guess it's that other 10%. And I don't know, Jason. It's going to be something where I'm going to be tuning in. I'm going to be watching. I can't wait for the lie-o-meter that, like later, after the debate's over. Oh, Trump lied 47 times and Harris lied 34 times and all this other nonsense. It is kind of funny when you think about it. It would be really cool. I mean, it could be like a great drinking game or party game. Right? If like, as they're talking, the screen just flashes lie, right? Like they're strapped up to a lie detector or something while they're talking, and every time they tell, or maybe they can make their nose grow like Pinocchio. I mean, it's definitely more of a WWE type debate than it is anything that resembles a political debate.
It'll be interesting. I'm going to watch it. It's pure entertainment. It's all it is. And I think this actually affects more votes than you think, Joe. Now, I think you're right. Most people already decided. But there's a large percentage of people that they don't know what they're going to do when it comes to voting. They just show up and vote because that's what they're told they have to do, or they're shamed if they don't vote. So I think those people actually that don't really have any affiliation and care, that they're going to watch this thing and think that this has a lot to do with how they're going to vote. And in those battleground states, it can make a difference. You turn one. Trump does something crazy today and gets a lot of good attention. He can gain 1% of those swing state votes on the swing voters.
Yeah, I think you're right. There's definitely going to be the small difference in those handful of states. It's going to be interesting. I think a lot of people are expecting Harris to be a dud. We'll see. She was a dud before when she was running for president, but now it's one-on-one. We'll see how it goes. If she performs well, then it's going to get really, really interesting.
I can make a prediction. I want to hear it. Kamala, and she doesn't like being called that. It's supposed to be Kamala. That's how you're supposed to say it. Kamala. Yeah.
Kamala.
I will almost guarantee she's going to try to come in very professional. So this whole debate is going to hinge on how Trump behaves. We know he's either going to come in and try to outthink his opponent, or he's going to come in and take low blows and in a nice way call her a prostitute to get to where she's at. He's either going to go that direction and light up the whole show, or he's going to try to trade punches with her. That's going to make her look better. To tell you the truth, Trump should just do what he did in the 2016 primaries. Talk about Rand Paul's bad hair. He should probably come in doing that, and it probably would gain him more favor. But I don't know. We'll see how his team plans it. We'll see.
I don't know. I'm gonna, I think Trump's gonna be Trump, and she's gonna get rattled. That's what I think's gonna happen. But we'll see. We'll wait and see. Our toll-free number 800-951-0592. The website at allamericangold.com. Of course, the physical delivery of gold and silver. If you want to do an IRA, maybe you got a lot of money sitting in an old 401k. Here's a great thing. We don't talk a ton about IRAs, but one of the cool things is it is self-directed. Of course, remember, I've been warning you about using these companies that sponsor. I just heard Dan Bongino, of course, right? He's now got this gold sponsor. They are rip-offs. I'm just telling you. If you've got a gold sponsor and they've got to tell you that they operate on 35% commissions, just hang up the phone. You got a gold sponsor, you're going to roll over some of your hard-earned assets like an old 401k, or maybe you've got a big IRA and you want to take some of it and put it into gold and silver. If they're trying to put you into proof gold eagles, proof silver eagles, hang up the phone. You know what? Don't even call them. Just call us right here at Patriot, 800-951-0592. And don't forget also our metals plan. We've been shipping those out all month long. With your pickups, your Phoenix, Colorado pickups, we'll do those at the end of the month. But for as little as $100 a month. Now, granted, that's, $300 every quarter. You get 4 physical deliveries a year. You set the amount. You tell us the day of the month. You leave a card on file. $100 minimum, no maximum. 4 physical deliveries a year. It's a great way to get in. And, of course, obviously, buying the specials that we run each and every day, another great opportunity. So we've got you covered. Right? It doesn't matter which one, whether it's an IRA. And like I said, the IRAs are cool. They're self-directed. What does self-directed mean? That means you're in charge. You can do whatever you want. You want to take possession of the gold and the silver we put in there? You can. You want to liquidate it? You can. You can do whatever you choose to do. Patriot Radio News Hour, Joe and Jason. By the way, forgot, yeah. CPI tomorrow as well. Another great indicator. All of that and more coming up next. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Tuesday. A quick look inside the markets here. The Dow is down 140. The S&P's up 9. The NASDAQ is up 60. Kind of a little disappointing there. Apple, with all their big announcements, all their new phones, and you remember that used to be like the big deal, and people would line up. They'd show these pictures, people lining up around the block to get their latest iPhones. It doesn't quite work that way anymore. Well, when they want, I don't even know, $1,500, something like that, and who knows, these latest ones probably even more. The 10-year note, here's some good news for those of you that want to maybe refi some housing debt here. The 10-year note, 366. Remember, CPI coming out tomorrow. Crude oil's down $2.50. It's funny, got a smaller hurricane's going to hit Louisiana. They've shut down a bunch of oil stuff. But news out of OPEC, oil demand continuing to fall. I think it's not a great sign. What's happening globally all around the world. Gold's up $3 more here, 25, 11 now, 2,511. Silver flat right now, 28.30. And I'll just tell you like we've been telling you. You know what's coming. Right, we got another possible government shutdown again and kick the can down the road. Social Security. Those guys are crazy. I love those guys. That report that they put out yesterday, and then everyone's like, okay, hey, listen, guys, all that you just read, that's like the least likely scenario. It's way worse than that, but let's all pretend that they're going to, need another 60-something trillion dollars. It's probably more like 120 trillion. But hey, at that point, who really cares? Get more diversified. Be smart here. Be really smart. We say it all the time. If you don't look out for your money, somebody else is gonna. And they've done a great job of without most people even being aware. Because most Americans want to, oh, no, they really can't do that. It really won't happen. Oh, yeah, it will. They don't make these rules and then think it's not going to happen. They make the rules because they know it's going to happen. Why did they change all the rules after the financial crisis? Oh, whoops, it did happen. Uh-oh, we got to get a lot smarter this time around. Be smart here. 2025, and I know a lot of people out there on both sides. They want to believe that, hey, if my guy wins, my gal wins, right? If the right person becomes president, I'm going to be okay. That's really naive thinking, because unfortunately, that may be the person that's least responsible for being able to control the outcome of what is coming. There's another debt avalanche coming, and that's the problem. I know it. I try to tell you about it. All the people that actually know what the hell they're talking about, they all know it. Doesn't matter. And again, it may matter about the border. It may matter, about tariffs, and it may matter about gun laws or things like that. Okay, yes. But when it comes to your wealth, I'm just telling you, if that's your strategy, that's what you think is going to happen, well, you are going to be in a world of hurt. I'm just telling you. A world of hurt. I don't want that. That's why I said, listen, yeah, do I want you to buy gold and silver? Of course. Of course. I've been doing this for 20 years. But, gold's only up like $2,200 since I started. It's done pretty good. Done pretty good. But this is why I tell you about my friends at YRefi. Because you can get a really strong fixed rate of return, up to 10.25%. Fixed. And it's not correlated to Wall Street. It's just that simple. That's all. Am I telling you to get out of Wall Street altogether? No. I've never said that. Never will. But what I am telling you is you better be a whole hell of a lot more diversified than you were the last time. That's it. Because this isn't a guess. This isn't, Double's trying to scare people. God, I hope people don't think that anymore. I remember for a long time, people used to say that a lot. No, I just want you to know the truth. Just want you to be prepared and understand the cycles that we live in. Listen, if they change the cycles, I'll change my tune. But they're not. Do yourself a favor. If you got $50,000 or more, at least check them out. Make a phone call. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YRefi-24. Jason, yesterday, consumer credit came out. Man, another $25 billion and revolving credit. So that's your credit cards and all of that. Surged another $10.6 billion. This was way higher than expected. And it was kind of like this crescendo of more people. It's been sliding up. Okay, it started out as the poor, right? Hey, okay, maybe I've got a $500 credit card, $1,000 credit card, and they've maxed them out. Jason, this latest report, this was a July number, talking about the amount of credit card debt added by people that aren't poor. Right now, it's not the upper class, right? But a large majority now of the middle class has run out of money, and they put it on the plastic. And this is another reason when you see credit card debt at all-time record highs, we see it all the time. That's actually another great indicator of bubble tops, right, is when the credit card debt, right, gets to these all-time record highs. And of course, it really had to do with people that had, better income. Hey, I'm making 80, 90, 100, 150, 200,000, 250. And a lot of these big cities, that's like poor. Jason, they're out of money.
There's a lot of people that are paycheck to paycheck, and that's always going to be the case with part of society. But the idea is to give yourself a shot to not be in that situation. And what we're talking about is more and more people being pushed into that situation and struggling harder. And Joe, tough decisions have to be made when you can't pay your bills. And if you're trying to do the right thing, which most people want to pay their bills, they'll get the credit cards. Like, well, we'll get on top of it somehow. And if you get one of those 20+% interest credit cards, you lose as soon as you load it and don't pay the full bill every month. It's a trap. And a lot of people get trapped into it, Joe. And I still think there's a lot more intelligence when it comes to the debt this time. I think a lot of people are loading up this time, Joe, and they're just going to just bankrupt right out of it. Yep. So the banks are in big trouble this time. The fact that I've talked about how they're giving loans to people, again, that shouldn't be getting loans. And they only do that when they're desperate to keep floating what they're floating, right, Joe?
A lot of leverage in the banks, and primarily these hedge funds, lots of risk in the market. There's been this kind of swell of people starting to be really worried. Remember, this is a problem in the Treasury market. There's a lot of hedge funds in the Treasury market, and it's not. Here's the difference. See, when a money market buys it, a Treasury, an insurance company buys a Treasury, right? They plan on holding it to maturity, and they're trying to, hey, we're trying to be safe here. If we only make a couple of tenths, we're okay with it, right? We're not looking for the big home run. We're just looking at, hey, we just don't want to lose any money, right? We just want to make a little bit. Not hedge funds. They're in there gambling, trying to make a big lick. And remember, we talked about, I want to say it was a week or two ago, that when the margin calls come, so who was it? Credit Suisse. Remember Credit Suisse? You know why they went under? A hedge fund took them under. They had big loans to this hedge fund. The hedge fund got a margin call, didn't have the money, right, to meet the margin call. So then guess what? It falls onto the bank, and it took them under. Because guess what? The bank didn't have the problem is the bank didn't have the money to make the margin call. This is a growing concern, and this is why, these are those events that you don't hear about. You don't see it. You're like, well, gosh, I went to dinner last night. There was people out, right? I went to the football game, and it was a sellout, and people were tailgating and blah, blah, blah. And it looks okay. Yeah, okay, yeah. There's some more empty buildings, and that Red Lobster closed down, or the Denny's closed down, or the Applebee's closed down, right? But it's just here and there. And then all of a sudden, you wake up one day, and people on the TV are screaming and hollering because the amount of leverage, especially from these hedge funds, it's a very dangerous proposition. And then delinquency expectations rising again. This is the highest they've been since they had a big spike when COVID came out, right? They shut it down. People got freaked out. But if you throw away COVID, expectations for delinquencies, we're talking about going back almost 10 years now to where the last time these expectations were so high. And, of course, at the same time, savings rates are at a record low. And, again, this is simple math. Okay, wait a minute. Credit card debt, all-time record high. Savings rate, all-time record low. Jason, it doesn't take a rocket scientist to figure out what's going to happen.
Well, and during COVID, all that free money was given out, and those savings accounts were all loaded up all big. And remember, well, where did all that money end up? Poor people, unfortunately, do poor habits, and it all went straight up into the wealthy's pocket and floated that boat a little longer, Joe. But look, we haven't filtered all the commercial loans. You know, and every year, more and more commercial loans have to be renewed. This is an ongoing problem. You know, this year is going to be worse. 2025 is going to get worse. And 2026, this is going to continue unless the Fed's going to drop the rates. I would have to say 2.5% to 4.5% minimum. I might have to drop more than 2.5%, but 2.5% might float some of these businesses to get a renewed loan at a higher rate. But if they don't, 1% ain't going to do it. 0.5% ain't going to do it. 1.5% is going to do it, Joe. These loans are going to fail every year at a higher rate. Those empty buildings, Joe, it may not happen all at once, depending on how big of a crash we have. It could just be more and more and more, and have like this rotting death of businesses as they can no longer handle the higher interest rates with the inflation that's going to continue to go on and on, Joe.
800-951-0592. Joe and Jason will be back after the break. 800-951-0592. $20 Liberties or Saints pre-1933, private gold, as we like to say. $26.95. So I'm trying to keep below that 2,700. By the way, gold's now up 8, 25.16. And again, remember, we get the debate tonight, CPI tomorrow. If that number is lower, right, that's the lower the better, right? The lower the better, because that gives the Fed can cut even more. 26.95, 20 or more, 26.75. Again, so close to spot now, so close. And just keep in mind, you can mix and match. You want the Liberties, they're the older, 1866 to 1907. The Saints, the Saints, they're the design, the Silver Eagle design now, right? Teddy Roosevelt didn't think the Liberty was majestic enough because, the United States was a superpower. Boy, we were a superpower on the gold standard. Are we going to cease to be a superpower on the fiat standard, right? That's the question. 800-951-0592, and another sign here. The holiday survey's out. So they do this every year. And it's a pretty simple, question that they ask people, which is, are you going to spend more, the same, or less this holiday season? This is the worst number that I've seen in years. 33% of the people surveyed said that they would be spending less this year than they did last year. On top of that, the big majority are saying, well, I'm going to try to spend the same. Very few, the lowest percentage, single digit, saying that they were going to spend more. And Jason, I don't think any surprise here. More and more people say they'll probably do it online, right? So kind of expected. The part that was disturbing was the amount of people saying, hey, we're not going to spend the same or more. We're going to spend less. And when you figure in the people that said the same with the people that said less, that was almost all the people. Almost nobody said they were going to spend more.
I don't know many people are wanting to spend more right now either, Joe. I mean, obviously, if someone's got a raise or got the big new job, circumstances, right? But other than that, it doesn't seem like there's a lot of circumstances in the people I know that are in the spend more field, Joe. That's that's going on right in my own world, right around me. You just have to, if you're listening, and ask yourself how many people you got around you that are in the spend more category. And I guess, Joe, one thing would be, well, if someone's loading up the new credit card, maybe, right, Joe? Is that spending more, or is that putting yourself in debt more?
Well, you know what? I don't really know anybody that's wanting to spend more right now. And I think that's kind of the big worry in all of this is going to be, and we're seeing it, obviously, right? We're seeing it. There was like 4 more bankruptcies already this week. All these different specialty retailers just heading towards the door because they just don't have the sales anymore. And like Jason said, the credit cards are maxed out. People are cutting back. All of those other things. And then let's not forget, right, what is it, the second day now that Russia said, hey, we're going to be increasing our gold purchases every single day. Another big story today, China is now paying Russia in gold for oil. This is a big development here. We talked about this a little bit yesterday as far as, where is gold going to go here? And it's something with rate cuts. And I think I'll say this. I'll leave it at this. If Jay Powell comes out and says, hey, we're going to cut rates once and then we're going to wait and see, we could have a pullback. We could. If Jay Powell says what I think he's going to say, which is we're going to cut rates and we'll cut them as many times as necessary. So I think it's what he's going to say. And I think their little dot plot chart, right, we're going to see a lot of 3, 4. You remember those, early in the year, some guy had 6 rate cuts. Yeah, I think you're going to see a return of that as well. And again, I've been saying this consistently. Don't be shocked here. 2,700 gold this year. Don't be shocked. 3,000 gold next year. And I think if things go poorly, it could be higher than that. But the one thing that I think is known now that wasn't known a couple of weeks ago is the Fed is done fighting inflation. They're done. They've said it. We're done with it. I think that's a mistake, but it doesn't matter, right? This is the new path. And I think with the addition to what's going on in Ukraine, I know the news is trying to make it, look, Ukraine took some Russian territory. Whoa, what a dumb move that was. The whole Donbass region is on the verge of falling here. And I think that the Ukrainians are in a whole lot more trouble than people want to believe. And now we're introducing secondary sanctions. We're going after the banks. And here's what India and China have basically said. We don't care. Fine, you don't want us to use the banks? We'll use gold. That's fine. And Jason, apparently the Chinese are more than happy to supply Russia with what it needs using gold. And I think the difference is I think Russia's sending more gold to China than China's sending to Russia, right? Because obviously the Chinese are going to buy the oil, they'll buy the natural gas with the gold. But the Russians are saying, hey, we got to buy even more gold, which tells me that they buy more stuff from China than China buys from Russia. The old trade deficit situation here. I think we can see a lot higher price. And silver, I know silver, we shouldn't be upset here at $28.40. But man, does silver over the next 3 to 5 years, does that chart, and when they factor in the supply that's needed versus what is available on both of these counts, we're going to see much higher metal prices. Are we going to see $4,000 or $5,000 gold before 2030? I'll be shocked if we don't. How's that? 800-951-0592. $50 silver. I'll be shocked. 800-951-0592. Patriot Radio News Hour. Joe and Jason, $20 gold pieces. Libs or Saints, 1 through 19, $26.95. 20 or more, $26.75. Silver, rolls of silver quarters. Listen, this is going to be the best deal out there. Rolls of silver quarters, save $10 a roll. $230 for rolls of silver quarters. Let me just tell you, India, man, we know they're a big gold consumer, right? Outside of China, India's number 2. Last year, in the first half of the year, India imported 560 tons of silver. I think for the year, they did like 1,200 tons. For the whole year. Last year. Halfway through 2024, 4,554 tons. Essentially, India is going to import almost 10,000 metric tons more of silver this year than they did last year. And by the way, in case you forgot, a metric ton, 32,150 ounces. To put that in perspective, they went from about 18 million ounces to 146 million ounces. But Jason, by the time they're done this year, they're going to surpass 300 million ounces. And this is a big thing with silver. I'm just telling you right now, the amount of silver that's available, another record, it's going to be close to a record shortfall. This will be the third straight month of shortfalls. And by the way, when you think about BRICS, right? I mean, India, China, Russia, and of course, all their ancillaries, right? We're seeing all of this growth in the Middle East, right? All of them into the gold markets. They're into the silver markets. It's needed for solar power, electric vehicles, electricity production. Jason, the list just goes on and on and on. India's a country, they need to triple their electricity output in the next 5 to 10 years. And there's only one way to do it, and that's to import silver and import records amount of silver. Like I said, I know you're like, well, Joe, we've been waiting. Well, have we? 2 years ago, silver was $16. Right? I know. It was in the 20s last year. It's been in the 30s this year. It's going to be in the 40s next year. And I think the year after that, Jason, probably going to see 50s in silver. And again, where does silver end? I don't know. Could it end near $100? Don't be shocked. I used to think that was ridiculous. But I look at the supply demand. Jason, it's just not there.
I like to look at the average closing price of certain commodities, gold and silver, of course, being the lead ones. And silver's had a rough ride. It's gone up just like gold over the years, but silver has a rougher ride, and it's been kind of lagging for a long, long time. But all you impatient silver guys waiting for the price to go to these huge levels, it's going to happen soon, because if you look at the average closing price of silver in 2018, it was $15.71. Except for 2021, it's gone up every year. So it did come back during the COVID inflation getting started in 2021. There was a push, a sell-off of silver, which didn't happen to gold, by the way, which is why you have the huge difference. But 1571 in 2018, 1622 in 2019, 2069 in 2020, 2514 in 2021, and then in 2022 it did have that pullback that year. The average closing silver price in 2022 went down to 2176, but if you look at it from 2020, it's still up from 2020. It's just down from 1 year. And then it goes in 2023 to 2340, and this year the average silver closing price is 2697. That average closing price, if we go sideways from here, is going to be more like 28. So it's going up every year. If you look at gold, and we're talking silver, if you go look at gold, we've been going up every year since 2015. The average closing price of gold is going up every year. If it wasn't for the games that were played in 2011 with the 2008 housing crash and giving all the bailouts and making a false sense of security for the sell-off of gold and silver back in 2011, Joe, which lasted until 2015, we would have been going up every year. It would have just kept on going. We are not experiencing the same situation. There is not going to be an exuberance of buying into gold and silver and then a Fed games being played and secret monies being handed out. They don't have any leverage. There's no more rope there. The inflation will go berserk if they try to give the kind of money out they were giving out in 2010. And so, Joe, these numbers will just keep going up. These average selling prices will just go up every single year. We might have 1 year, maybe, Joe, maybe somewhere in the next few years, maybe there's 1 year it just sort of settles. But every year it's going up. And the way the inflation's going in this country, Joe, it's just going to keep going up. You're going to buy gold. You're going to protect what you've saved so hard-earned, right? Savings is so hard to earn, Joe.
Well, I got breaking news. J.P. Morgan shares are down big today. We've been telling you something's up with the banks. Just look at Warren Buffett. I'll tell you what the president of J.P. Morgan said about his bank and all the other banks coming up next. 800-951-0592, Patriot Radio News Hour. Okay, one last time here. $20 gold lives in Saints. You pick it. $2,695, 20 or more, $2,675. Rolls of silver quarters. Jump on these here. $230. You're saving, $10 a roll? I'm sorry, $200. Let me get this right. I may have screwed that one up. It may be $220 a roll. The girls will have the right price. So give me a second. I'll look into it. But I want to get to this because it's really important here. J.P. Morgan President Daniel Pinto. So Jamie Dimon's the CEO. Pinto he's the president. He's next in line, driving banking shares lower as he called the current estimates for bank earnings not very reasonable, and the figure will be well below what is estimated. And here's the sad part. J.P. Morgan gave a forecast, it was like 60 days ago. Well, yeah, everything's great. Oh, wait, no, it's not. Blaming the interest rate environment. Jason and I talked about that this week. Also said that investment banking fees are going to be below expectations, and market revenue will also be below expectation. And on top of that, Goldman Sachs CEO warned yesterday that his firm's actual trading revenue could actually fall 10%. So, Jason, more weakness in the banks. And again, I'm not too surprised here as we've been noting about what Warren Buffett's been doing with Bank of America. But this looks like substantial weakness.
All I have to say is, phew, I'm so glad Jamie Dimon sold all his J.P. Morgan stock a couple months ago.
Yeah, that's right, Jason. He sold a ton of it this year. By the way, silver quarters, $220. See, I'm an idiot. You can't even trust what I tell you. $220 on rolls of silver quarters. $2,695 on $20 gold pieces. Buy 20 or more. hey, we'll take it down to 26.75, and gold's up near the highs of the day here, $2,517. Silver getting ready to break back into positive territory, and looks like the losses on Wall Street getting a little bigger here, as Goldman Sachs and now J.P. Morgan are all warning that things are going to be light. The banks are going to be under more pressure. I think we're going to see, I wonder how big the increase in write-offs are going to be. I think this is going to be another, it's already bad enough that they're saying, hey, investment banking earnings are going to be less, revenue's going to be less, right? What about the write-offs? Is that going to be more than expected? And I think these are the things that we got to worry about, Jason.
Yeah, well, this is what we got to look at. But it seems like when we talk about these CEOs selling off stock, it doesn't take very long before they start to tumble. He couldn't have called that better if he tried. Or wait a minute, I think he did try. He did try.
He tried.
I'm sure the information they were given to all their employees were, oh, no, hang on, you're good. Jamie's got to have he's got to have some profit taking. Take it easy, guys. He didn't sell all of it.
Right. Yeah, just a little bit. Just some billions. No big deal. It's all fine. Don't worry about your bank. Yeah, okay. Put it in gold and silver, and you won't have to. 800-951-0592. Jason and I are coming right back with the half